Hello everyone, welcome back to Upside Down Data. Today I want to give an update about our risk indicator for HBAR. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter where we put out regular updates about our risk indicators and more. So if you saw our earlier HBAR video, you would have seen a graph similar to this, and this is just updated to include the days that have come since that video was posted. So that video was posted on October 28th. So we have a couple more weeks of data now. We can look and see what's been going on in the market, see how well the UDPI has been performing, what it thinks HBAR might be doing in the near future. So for those new to the channel, what you're seeing here is the price history of HBAR over time. Price is in logarithmic form, and the dots are days, and they're color coded to the output of our risk indicator. So 5 is high risk, -5 is low risk. And as you can see, the UDPI does a really good job. That's the name of our risk indicator, the UDPI. Does a really good job of identifying kind of these low risk zones as well as these high risk zones in HBAR's history. And so currently what happened with HBAR is we had this kind of cooling off period in this correction in the summer that led ultimately into this big peak that we saw here back a little bit earlier in the fall, kind of got back up into that red territory a little bit, and now we're kind of been consolidating, slowly kind of moving up here. And you can see that the UDPI has been getting more and more bullish essentially on HBAR as we've kind of consolidated and then now started to move up. You'll see that it went from these higher risk zones and it's now fallen down into this more middle section here, actually kind of dipping all the way down into the negatives as it went through here. And then, of course, you can also see that as the UDPI over here was getting more bullish on HBAR, then HBAR did actually start appreciating in price. Its price did start moving up, which is interesting to see. Basically, the model was thinking that HBAR had more and more upside potential to realize, and then HBAR went ahead and started realizing some of that upside potential. So that kind of made sense from the perspective of the model. We can see this a little bit more clearly here if I just show the output of the model across time. So here the UDPI output, so the risk output is on the y-axis, 5 high risk, -5 low risk. And so what we can see is we kind of shot up from below -4 up to almost 3 here's a couple months ago. And then the UDPI was kind of cooling off. It was saying that HBAR was having an increasing amount of upside potential it could realize, and then actually dipped below 0 here, and it's still below 0, suggesting there's more upside potential in HBAR than downside potential at this present moment. But as HBAR has started to realize some of that upside potential now in the last couple of weeks, in the last week or so, then you can see the UDPI is rising up. It's recognizing that HBAR is starting to realize some of the upside potential. So again, still below 0, still a favorable risk reward ratio, but not quite the same as it was before HBAR really started moving up there in the recent past. So it'll be interesting to watch this and see what happens. So what I imagine is that if HBAR continues to perform well, and it has been kind of outpacing a lot of the market currently, it's been doing quite well, even though we're in this kind of slump right now where Bitcoin has fallen off of its all-time high. You know, last I checked, we're in the 63K range for Bitcoin, so quite a bit off of the 69K that it just put in for its new all-time high. But even despite that, HBAR has actually been appreciating in price. And from the perspective of the model, maybe that kind of makes sense, right? You know, HBAR was kind of a lower risk asset in the crypto space. You know, it was down here, it got down to below -1. So it kind of makes sense that if there's going to be an asset that would be outperforming others, it would make sense for it to be a lower risk asset. And HBAR in this moment was lower risk, so it kind of makes sense why it might be performing so well. So to put this in a little bit more context, so when I put out the first video on HBAR, this is where things stood. So it was October 28th. The UDPI was at -0.66, and the price was here at 37 cents. So not too low, but still off of where I had put in its all-time high a few months ago. Decent correction from there. And what we can see is that now here on November 12th, UDPI has risen a little bit, so -0.15. So HBAR has realized some of the upside potential, and indeed the price has risen by about 20%, a little over 20% or so. But what I think is interesting to note about this, kind of as I was mentioning before, is given that HBAR was becoming a lower risk asset relative to some other cryptos, it kind of made sense to me why it would be one of the ones to be performing well, kind of in the weeks to follow when this video came out. That if I had to place a bet on which assets I think would do better, I probably would have bet on the lower risk assets. It just kind of makes sense. They have more upside potential than downside potential. There might be a little bit easier for them to move up than some of the other assets that might have been a little bit more overheated. And so this is a nice little 20% rise. But I think it's also just interesting to think about how things have gone those last couple of weeks for other assets as well. So HBAR, had about a 20% rise. Turns out that a lot of the other assets we were following that had pretty favorable risk-reward ratios at that time also have done quite well. So, Algo is one that had been sitting in the negatives for quite a while. It was pretty well in the negative. I think it was below -1 even when on October 28th. It's up about 20% currently. XRP has also been hanging out in the negatives. That's up about 20% from that time. So these lower risk assets have been doing quite well. Even ADA is up about 7%. It had been up about 20% just a couple of days ago, but it kind of dumped a little bit in the last couple of days to get a little bit further down. And when you compare that to some of the other assets we've been monitoring that had been a little bit higher risk or have been a bit higher risk, so DOT being the most extreme example of this, DOT is down about 15% from where it had been back then. DOT was up in the 50s, $50 range, but now it's kind of corrected down to the mid 40s with this kind of correction that's happened with Bitcoin and everything. And again, that kind of made sense. DOT we kind of knew is a little bit overheated from what the UDPI was telling us. And so if I had to put my money, on an asset, not doing super well, if Bitcoin has a correction like it has, I would have expected something like DOT to maybe be hit a little bit harder than some of these other assets. And it's interesting to see how DOT has fallen 15% in that time, but then an asset like HBAR has risen by 20% in that time. And again, DOT was high risk, HBAR was low risk back on October 28th, and we're still kind of in that same ballgame, but with DOT having corrected a bit from how high it had been, and HBAR kind of realizing some of its upside potential now. And so none of this is guaranteed, of course. This is just a very specific example in time. There's nothing to say that HBAR had to start realizing its upside potential or that Algo had to start realizing its upside potential when they did. It's very just as possible. It's very possible that they could have also dumped when Bitcoin dumped. But one thing I'm going to be watching, one thing I think is interesting is that it seems like with these assets, if you're going to kind of stake a claim one side or the other, it's probably safer in some ways to think that the low risk assets are going to perform better than the high risk assets in the near future. And so it might be more reasonable to expect that they'll be more resilient to, corrections in the market that Bitcoin has or something like that, than something that's kind of already overheated, where people, once they smell fear, might start just dumping off, taking profits on that heated asset. So again, you can't take this to the bank, and it's a little bit questionable to be reading too much into things on kind of a week-to-week time frame. But I do just think it's interesting to note that the assets that we've been tracking that were kind of lower risk have performed better, pretty much to a T, than the assets that were kind of higher risk. Just some other examples of ones I haven't done as well. FTM is down about 10% in that time frame. I think one's actually down a little even more during that time frame, and these were also ones that were around the 1 level back on the 28th. And so they're still hanging out there, but they've had corrections. So the UDPI hasn't really become convinced that they've cooled off, back to these more favorable risk-reward ratios. They're still not unfavorable by any means. Being at 1.23, these aren't super overheated. They're not at 3 like DOT is, but they're also not super low either. So it's just interesting this is an interesting observation that I had when I was going back and looking at these things, looking at what the UDPI was at that time. When I put out this HBAR video on the 28th, and then where price has moved since then. It just seems like overall price has moved kind of as we'd expect from the UDPI. The ones that were lower risk have done well. They've actually appreciated in price since then. The ones that were a little bit higher on the UDPI have fared less well. So ones like DOT going down about 15%, and some of the other ones that are a little bit hot back then as well, also not performing quite as well. So again, you can't take into that to the bank. None of this is financial advice. Form your own opinions. But it is something that's interesting. And as we go forward in time, as we keep monitoring these assets, and as we add more assets to the UDPIs for more assets, and we keep following more ones, something I'm going to keep an eye on. Just kind of keep an eye on how well are things performing based on where their UDPI was, a few weeks ago or things like that, and just see if that trend kind of holds up. And ultimately, of course, once we get to the stage in the market cycle where things are really going nuts and things are pumping like crazy, getting up to these 4 to 5 risk levels, that's when it's going to be a little bit more kind of easy to recognize which ones might be doing better than some others in the future. If you have one asset at 4, another asset at -2, then it becomes a little bit easier to be confident that the -2 might be doing better in the near future than the 4. We haven't really quite gotten there yet. These are kind of more subtle differences, but still interesting to observe what has happened. So again, not financial advice, from your own opinions, but just some things that I've been observing in the market. Alright, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. And remember, with the UDPI, we're all going to make it.